According to supply managers in the 9 Mid-America states, how is the economy performing?
Well, the economy for September, according to the manufacturing supply managers in the 9 Mid-America states from Creighton's monthly survey, was up a bit, but we're still seeing a slowing manufacturing economy, and that's what we're faced with right now. The U.S. number will come out later on this morning. I expect that number to likewise be in a range that's indicating a very soft manufacturing economy with rising potential for a recession, either in the final quarter of 2023 or the first quarter of 2024.
What were the hiring trends?
Hiring was not good for the month, but it was up from last month, the overall index. We're seeing a slowing in hiring. We're seeing more job losses in the manufacturing sector. In fact, we've seen probably 3 consecutive months of job losses, but they're minor. They're small job losses. I don't want to overstate this. The job market remains reasonably strong. Well, strong is not the right word. It remains solid, even if it would be an exaggeration, but it's still not in recession territory.
What inflation trends are you noticing?
Inflation was up and indicating too much inflationary pressures at the wholesale level, with oil prices up significantly in the $90 to $100 range. That's putting upward pressure on inflation gauge, the wholesale inflation gauge. Even with that, though, I think the Federal Reserve, is going to hold off on a rate hike at their meeting on October the 30th and November the 1st, those meetings. But I do expect a rate hike by the Federal Reserve in December. That will be the following meeting. So I expect at least one more rate hike by the Federal Reserve. And of course, that's going to slow the manufacturing economy. That will slow the overall economy. And that's what we're seeing. And in fact, we asked the supply managers about their expectations of a recession, and almost 50% expect a recession no later than the first quarter of 2024. So yeah, the recession outlook, the probability of recession, is rising each month. Still positive numbers for the third quarter, fourth quarter, rising inflation, rising recession expectations. And again, about 50% expect a recession no later than the first quarter of 2024.
What is the economic outlook?
The outlook is for a slower economy, slower growth economy, and the numbers are really pointing toward a recession. Recession is as early as the fourth quarter of 2023, but more likely in the first half of 2024. I do expect credit conditions are a real issue out there. The manufacturing sector really got some real issues out there in terms of the interest rates putting downward pressure on manufacturing. We're seeing the problems in the credit sector. That would be more in real estate, commercial real estate, and residential real estate. Those some real problems there, and that's spilling over even into the manufacturing sector. So I really do, and the survey of supply managers, they likewise expect a recession either before the end of the first quarter of 2024. So the outlook right now overall is for a recession, a mild as it may be, mild recession, as early as the first quarter of 2024.
What are indicators to watch?
The indicators, it's very critical to watch these indicators, which are really, I would call it just changing on a dime, meaning they're changing very quickly. The 10-year Treasury is now up the highest rates we've seen in a long time, and that's putting downward pressure on building of anything, industrial building, that'd be manufacturing, but also residential building, also in commercial building, commercial real estate, not good. So keep an eye on that 10-year yield. If that should move upward close to 5%, it's now above 4.5%, highest we've seen in many years, decades. And that's something you need to keep an eye on. Keep an eye on the oil prices. Oil prices moving. We're in the range of jeopardy. I'll call that jeopardy of, again, a recession as early as the fourth quarter of this year, and probably no later than the first quarter of 2024. Also, keep an eye on the employment report. Now, we've got a potential shutdown of the federal government. Of course, And that is a critical issue. If that happens, we'll not get employment reports, which are usually the first Friday of every month, first Friday of October. We won't get them. Assuming the government does not shut down, then we're talking about looking at keep an eye on the retail sales number, compare that number seasonally adjusted and just for inflation also. In other words, it should exceed inflation. That would mean that retail sales year over year should be stronger than say 4 to 5%. Should be in the 5 to 6 to 7% range to indicate the consumer's not pulling back. If the consumer's pulling back, meaning retail sales up by a smaller number, something like 1, 2, and even 3%, then that's a danger sign. So keep an eye on that as well. And also, of course, the supply managers survey coming out later on this morning, what that index number is. Will it be above growth neutral or below growth neutral? But until then, until we meet again on the first business day of the month of November, may your economic cup runneth over, and thank you for joining in.